question of benchmarking against the interest rate. This is really the heart of the cost. The cost of the sharing, or the consumer in this sense, is utilizing a portion of the property they don't yet own, and so they're paying a profit payment for it, as in parallel to paying to acquire more shares from guidance. The question is, how does guidance determine its profit payment? And there's an understanding that it's benchmarked against interest rates in the United States. Is that permissible?
I think you had this on the guidance website at one time. If your business is potato chips and you produce halal potato chips, and the man next door produces potato chips that are produced with lard, so they're not halal. In the market, if you, with your halal potato chips, want to be competitive, you'll look at what he is charging for his bag of potato chips, right? It's 12 ounces, it's 16 ounces, whatever it is, whatever the price is, you want to be competitive. If you can undercut that price, then all the better. The same thing with a mortgage. The mortgage market is well established. It runs on its own principles. It fluctuates just like any other market. Sometimes it's up, sometimes it's down, sometimes artificially so, whatever the reasons. But the point is that if guidance, or if any Islamic financial institution wants to be competitive with its product or products, then they need to be cognizant of the prevailing prices in their markets. So the market for home finance, unfortunately, here in the United States is 99.9% based on interest and mortgages. Now, if guidance wants to benchmark, wants to be competitive, they need to benchmark against that standard. So that's the long and the short of it. Benchmarking has absolutely nothing to do with an interest component for the contracts that we've developed for guidance residential.
I don't know if you had anything to add to that, Dr. Imran?
No, I agree with that, and my father has completely mentioned in detail all of these things, and even IOFI, which is the issued the Sharia standards, it has allowed that to use, because you know that if you are in a certain market, you have to be at the rate of that particular market. Otherwise, if you make your price should be higher or lower, then you cannot basically survive in the market. So it is not a determinator of any particular contract that it should be lower or higher than the benchmark. It is not the determinator. The determinator is that what is the underlying contract. The underlying contract is same, but to be in the market and to be in that same market, you have to follow the market rate. Otherwise, if you go lower or very high, either way, you will be lost. You know that every businessman can understand that thing. If you are selling a particular KFC burger with a halal shop, and then you are saying that particular burger on haram shop, but the rate must be high, otherwise the people will not go to that shop, which will be either lower or higher. So it is the same thing. So it doesn't it is just criteria of market rate, and it should be competitive so that both parties could get benefit out of that. Otherwise, you know, if it is not competitive, so either the guidance will be in loss or the other party or client will be at loss. So it is very logical that it should be at particular benchmark.